evening. This is the video newsletter for Buy Sell Short for Tuesday, January 25th. Pretty interesting market today. Yet again, the end of the world was just around the corner. We had the bears and the shorts thump on their chests, and things actually over the last couple of days haven't looked that great. We've been pretty high cautious, cash stance, for the last week or so. And, as I've said a couple of times previously, this is the time of year, especially after we've had the mania in small cap stocks that we have had over the last couple of weeks, that we start to see weakness creep into the stock market. We have traders expecting weakness to happen, and that sort of feeds on itself. And, it's hard to find really decent plays, or at least it was, a day or so ago, because so many stocks have run up really, really big. Looking at the Dow 15-minute chart, that little head and shoulders, inverse head and shoulders formation we had gave a nice little 100-point pop. And, today things just weren't acting right. We had a lot of weakness in small cap stocks like we've had over the last couple of days. And, for that reason, we started raising our cash levels. I sent that email out, time to flush out some of the stocks that we've been sitting on, over the last 3-4 weeks. Get rid of the old plays, get rid of the partial positions we've have sitting around from all the numerous winners we've had over the last month. A good flush, every few weeks is a very good thing. Some of you, of course, were asking, hey, if you're having us go high cautious stance on the market, why the hell aren't we shorting? And, if there was a reason to show you why we're not shorting this market, look what happened today in the last few minutes of the session. Right here is a 3-minute chart of the Dow, and you can see right here, this is where the bears, you saw them finally appear on a lot of the message boards going, aha, the bottom's coming, the top is in, the end of the world's here, we're doubling down for the 15th time in the last 2 weeks on our puts, on our shorts, where are you bulls, where's your pom-poms, the end is here. And then out of the blue, kaboom, we see the Dow run essentially 40 points in a matter of 20-25 seconds. And here you can see it on the Dow. I mean, we essentially rallied 80 points. 50 of those points came within a minute or so. And then you see this little dip on the 3-minute chart on the Dow. What happened here was, CNBC, with their breaking news alert, came out and said, hey, IBM had an erroneous trade. It was trading at $160 a share. Trades crossed at 164. That's the reason the market popped. And then you saw traders, and shorts go, oh yeah, that's the reason. And the market dipped here. And then what happened? We rallied to new highs going into the close. Dow ends down 3 points. S&P and NASDAQ end green. And here we have the shorts yet again shitting their pants overnight going, what the hell has happened? And, the answer is simple. You don't fight the Fed. There's $8 billion of liquidity coming into this market every single day, and the places for that money to go are few and far between. I read an interesting post from a trader friend I have of mine, which is actually a really interesting theory on the market. For forever and a day, the safe place to park money has been government debt, state and municipal debt. And that, is no longer the case. And, what we could see happening is, these funds who are selling this government debt, there's really only one place for it to go, commercial debt. And that's great for stocks. And even though it's crazy to think the market may keep going higher, there's very few places for that money to get parked right now. And, this is what we've seen happen in the market. Why no shorts? Because of what happened here on this chart right here. The Dow did not break down today. I mean, you had traders out there going, the end is here, the market's over, down we go. Let's look at the charts and have a little bit of common sense here and not the stupidity you see spewed by a lot of traders out there. Here is the Dow daily chart. Are we overbought? Hell yeah, we're overbought. But we're in a very nice uptrend. We're above all the moving averages. We're overextended. RSI is deeply overbought. All the indicators are the same. But here's the 20-day exponential, 11,747. Did we break that? No. We're at 11,900. Why is the top in? Maybe if we break this uptrend line here, Yes, definitely we are in store for one of those 5% pullbacks in the market. And are we overdue for a pullback back to the 50-day moving average down there at 11,479? Hell yeah. Do you want to try and time the top with the Fed out there pumping shitloads of liquidity into the market? There's some traders out there who prefer to do that. They see the market red, they think the top is in and they blanket short a bunch of things. I'm shorting the Dow, I'm shorting the S&P, this market's topped. You don't hear from these guys, 10 minutes later when the market goes on an 80-point rally, you hear the next day when the market's red again, they go, ha ha, I doubled down on my short there when the market was at its lows. I'm going to post now, when we're red again. That kind of nonsense. Whatever. What we short are sure things, and sure thing shorts are what we called a couple of days ago on MSHL. This is a sure bet short. 3 days up, you short late on day 3, you add to the short on the pop on day 4, and down she goes. Perfect. If you followed this strategy that I mentioned in the video on Sunday and shorted, we talked about it late on Friday of shorting 340, half position if you could get shares, and then shorting the pop the next morning, you're up 33% in 2 days with an almost sure bet short setup. Versus these clowns who are out there going, yeah, the top's in, I'm going to short the S&P 500, and then they end up covering. This is what we short. We go high cash when there's few trades out there or things get iffy like they are right now. We have no stress, we're high cash, and we sit back and we wait for the morons who end up selling the bottoms, and then we swoop in because we're not worried about losing the gains that we gained over the last couple of months, because, we were hoping for things to move. If the market breaks over 12,000 tomorrow and we start to see a bunch of stocks pop up, we rebuy them. Simple as that. These shorts are, just premature in my opinion. And, enough about that. Dow 15-minute chart, let's look at that. As you can see, we're well above the first trend line support on the 15-minute chart. That's at the 200-day moving average, 11,850. We didn't even come close to that. All we did was retrace all the way back to Monday's price. Oh my God, the end's here! I hate to beat a dead horse, but the stupidity you read from some traders just blows my mind sometimes. Are we getting cautious? Hell yeah. Can we rebuy stuff again? Yeah. Looking at the 15-minute chart right now, if I was short this market, I'd be a little bit concerned going into tomorrow. Fed day, when we talked about this rally back there in December, we said the rally would probably continue till the FOMC meeting in January. That's tomorrow. We also have the State of the Union address tonight. Of course, a lot of it's going to depend on the U.S. dollar, which is broken down, but typically we've seen the U.S. dollar pop after the Fed announcement. So let's see how that trade acts. Now, we got a lot of shorts trapped in this market over the last couple of days. Very, very nice. I'd actually would have preferred that the market continue selling off today so we could trap a few more of them for a few more days to make the upside even more. But, breakthrough 12K tomorrow is probably going to have some of these rookie moron shorts cover, and that might give us a little bit more upside. But, high cash stance right now, bullish trend is still intact. We're well above supports on this market, and, just a lot of stupidity out there right now. SMH, early weakness in it today. Closed pretty strong. We also had the QQQs end up closing at the high of the day going into the close. Again, the action that we're seeing here right now is exactly like we saw in early November. We had a couple of week period where the market sucked balls. There wasn't a whole lot of trades in there. A lot of shorts got trapped. It was the end of this rally, and then we ended up running, from that low, 20%. So, let's see if the same thing happens again. Stock plays, as I mentioned, getting rid of all the old plays, get to a level that you are comfortable with. A good flush does wonders for the mind, especially as a trader. Trading is 90% mental. If you're in that happy zone of sitting on high cash with a lot of the profits we've made over the last 2 months protected, it makes it a hell of a lot easier to jump in and grab stupid dip trades that, we've seen left and right. Look at PRKR going into the close, out of the blue, stock was down 20%. If you're holding a bunch of other stocks and you see a trade like that, your balls sort of swivel up and you're not ready to jump into trades like that. If you're high cash, you're ready to take those gambles. You're ready to jump in on those dips. CVM, this was a new trading alert today. The reason for this trade, we had a nice little candle bottom on it yesterday. The angle here was Amgen paid $475 million for BioVex. They've got a head and neck cancer drug in phase 3 trials, just like CVM does. CVM, $150 million market cap, going off the Amgen buy and the interest in head and neck cancer. That makes CVM an attractive candidate with a nice chart. We've got support, uptrend support at 70 cents. After today's move, you could probably trail your stops higher to 72 to 74 cents or break even where we jumped into this one. And, minimal downside, decent upside. This stock actually closed at its highs going into the close on a market day where traders were really, really scared of small cap stocks. That's a good sign in my opinion. RSI, we've got some upside there. Stochastics have triggered a buy. You know how I love seeing stochastics break up through 20. So, the chart looks good here, and we'll see how it acts tomorrow. NEI, huge breakout over the last 2 days. We were a day early calling the bottom on this one, which, I'm not perfect, sorry. Nice, 50% or 50-cent move on this one over the last 2 days. We jumped into a scalp position in this one yesterday that, really hurt on that early sell-off today. But, seeing a lot of crazy action in a lot of small cap stocks, which is why we went to high cash, like NEI gapping down 10 cents on the open and then out of the blue dropping another 15 cents. Robots going a little bit crazy on some of these stocks. But NEI, they report earnings on Thursday, pre-market. As you know, EMC is NEI's largest, earnings driver. NEI gets 58% of their earnings from EMC. EMC posted a monster earnings report today, upped their guidance just like they did last quarter, and I'm expecting NEI to report another. I'm thinking they're going to beat their number again, so I'm probably going to be looking into taking some of this into earnings. We rarely play stocks into earnings. This might be a decent gamble, in my opinion, into the earnings report on Thursday. And, there's going to be traders going, hey, the last earnings report, this was the last earnings report on NEI. Big run up into the earnings report, a sell-off, and then a nice big run again afterwards on earnings day. Traders are saying, hey, it's going to sell off again. Yes, but we've broken that previous trading trap that this stock was in. Let's take a look at the 1-year chart so I can show you what I'm talking about. NEI finally broke out of that big trading range, so maybe this time around it's going to be decent or different. And, just like EGHT and WSTL, I think this is a stock that definitely can recover all of its gains. And let's see if it can start doing that this week on its earnings report. GNVC was trading at 72 cents in pre-market, had decent news. Market, again, victim of the market here. Held up pretty well going into the close, so let's see how it happens. We're still sitting on a nice gain on this stock. Held up pretty well during the market, so let's see how it acts tomorrow and decide what to do after that. WZE, quick update on this one. We've got Macworld starting, I believe, Thursday, or is it tomorrow? Again, traders have sort of abandoned the small cap stocks right now. There's a lot of panic out there. But, it won't take much to push them back in. Also, another thing and another reason why we pushed to high cash today, it's hard to find trades that make me want to go, I'm going to pound the table on this trade, at least over the last couple of days. So many things are up a lot. And over the last couple of days, believe it or not, we've seen a lot of stocks actually pull back nicely in small cap land. So that's what we want to see, We want to be sitting in high cash so we can benefit from those pullbacks. So, that's pretty much it for the video tonight. We've got the State of the Union tonight. Let's see what the president says. If he moves to a more centrist stance, which is probably likely, or pushes to the right in his speech, you're going to see stocks respond favorably to that. A leftist push, which is highly unlikely in my opinion, and they'll use that as an excuse to sell stocks. We've got the Fed meeting tomorrow. There's really going to be no surprise from the Fed meeting. They're going to say the same old, same old. It's going to be interesting to see. We've got a couple of new voting members, I believe, who've been pretty anti what the Fed has been doing. So it'll be interesting to see if Bernanke can get them to fall in line. And, a little sell off here would do us the world of good. I'm bashing the shorts here, but I'm bashing the stupid people who are out there just blanket short selling stuff. Rally is still intact. Remember the stat I sent out after the midterm elections: the S&P 500 gains 8.5% on average during the first 90 days after the election. We hit that on the nose. S&P 500 gain first 200 days after a midterm election is what? Let me see here. 34%. We still got lots more time for lots more upside. Little pause in the market. Let us catch our breath. No need to worry. We're sitting on high cash. If things start to rally again, we can start buying new stuff. That's it for the video. I will see you guys in the chat room tomorrow. Any questions, just shoot me an email. Good night.